My next guest says that the market is shifting from, quote, growth at any price to, quote, growth with productivity, centering on cheap power, infrastructure renewal, AI-driven efficiency. We've been talking about this stuff, so let's bring in Strategy Asset Managers, CEO and Managing Partner Thomas Holik. And so, I mean, it sounds catchy. It's a catchy phrase, but what exactly does it mean? How's it different from what's been driving this market?
Well, you've got technology and AI driving efficiencies in several sectors. Lots of companies are benefiting from it. So when you take a look at the momentum that we've seen right now with what AI is doing for some of these companies that we're going to talk about today, I think that you have to take a different perspective. And the perspective is don't fight the trend, don't fight the momentum, and AI is really transforming the way that we're going to see things going forward.
But essentially we're moving from that picks and shovels into use cases and how that's impacting, I guess, top and bottom lines.
Right. So there's a convergence between energy, infrastructure, technology, and you can even go in certain sections of the health industry. And when you look at how AI is driving these efficiencies in these markets, it's transformative. We like the tech sector. We're not going to fight the microprocessors, the chip companies. We think that they're going to drive efficiencies, as I said, in multiple companies, and that's downstream. And as an active manager, we like to focus on companies in that area.
And you've been in Palantir for a long time. So, I mean, the hiccup on earnings today is not something that necessarily worries you. We're going to show just some of the charts here. You know, the CEO really obviously bragging big time about about the quarter, saying we have $476 million in profits this quarter. Again, a record for our company's history. And to be clear, nearly $500 million in only 3 months. And the growth has been rapid. Those on the other side of the trade say, yeah, but the price to sales ratio is 142. Is that old school, those old school valuation metrics? They have, I mean, if you adhere to them, you would never have been in the stock in the first place. So it's almost, you know, it's almost a moot point. But at some point, do they matter in terms of being a long-term holder?
They do. You know, Strategy Asset Managers' history as a separately managed account manager has been a value manager. But when you take a look at companies like Palantir in the growth sector, and then you shift over into what they possibly can do with the commercialization of cybersecurity and also in the defense industry, it's monumental. I mean, take, for example, our national security. Paramount for importance. Palantir is leading the way there, and I'm a full patriot, and I want to see Palantir succeed. Their valuation is not important to me at this point. We still own it. We like it.
Healthcare stocks, you said be selective. I know you like Lilly and Intuitive Surgical.
We do. Intuitive Surgical, Da Vinci, robot surgeries. We think 100% of the surgeries in the future are going to have a robot helping make better precision incisions. And if you talk about Lilly, their next generation retatrutide, it's also helping you with liver fat, losing weight, but it's also decreasing, or actually, you're not losing muscle that way.
Right.
These are next generation drugs, but they're also being helped along the way by just advancements.
And you read some of the wonder drug effects, you know, in articles as they get better with these, and it's going to far beyond just weight loss.
Sure.
To your point.
Sure.
One last one before we run out of time. Cameco. Yep. I mean, this is just this is a uranium play. Speaks for itself.
Uranium, right? Yeah. Utility, uranium, power, however you want to look at it. Partnership with Westinghouse right now, public-private partnership.